Hi, this is John Prasinos, Editorial Director of Investing Daily, with a video update from Monday, June 15. Let's assess the situation as it stands now, courtesy of the coronavirus. The global economy is in the midst of a severe recession. Projected S&P 500 corporate earnings growth is dismal for the rest of 2020. Unemployment around the world is the worst since the Great Depression, and the coronavirus is resurgent in many countries, including the United States. Despite lockdowns that battered the U.S. economy, cases of COVID-19 are actually rising in several states, with reports of record hospitalizations. Street protests and political rallies are helping spread the virus. Investors fear renewed lockdowns and economic damage, dashing hopes of a rapid recovery. Small wonder that stocks last week posted their worst weekly performance since March. Also dampening investor sentiment was the dour economic outlook expressed by Federal Reserve Chair Jerome Powell. Investors decided it was time for some profit-taking. The following table tells the story. After a historic push higher from its March low, the overbought market finally ran out of steam as the negative news became too overwhelming to ignore. Volatility is likely to stay with us through the presidential election in November. The market last week recorded its first three-day losing streak since February, with an 1,800-point drop in the Dow on Thursday that rekindled traumatic memories of the February to March implosion. Despite last week's decline, the market remains overbought. But corrections can be healthy. They restore equilibrium. The stock market is forward-looking. You should be too. Once the global economy gets on the other side of the coronavirus crisis, many companies will find themselves in even stronger shape. The pandemic is causing shifts in buying habits, consumer expectations, and workplace practices. The winners will occupy such segments as robotics, remote and mobile applications, artificial intelligence, 5G, that's fifth generation wireless, and cloud computing. The coronavirus is giving birth to disruptive technologies that will, in turn, create entirely new industries and products. From this creative destruction, we'll witness exciting investment opportunities. Keep plenty of cash on hand, roughly 45% of your portfolio assets right now, to pick up stakes in the emerging stars of the post-COVID world. In the meantime, if you have any comments or questions, drop me a line at mailbag@investingdaily.com. Thanks and stay safe.